Hi, Dawn Lambert with Town and Lake Homes and eXp Realty. I hope you've been enjoying your summer. It is the end of July and I'm coming to you with a market update. Give you an idea what's going on currently in the changing real estate market, as I'm sure you've heard, and also to help you dispel some myths that you may be hearing about the real estate market. So let's get right into it. Myth number one is that home prices are falling. That's really not the case. The data is showing that home price appreciation is still increasing despite the market, just at a slower pace than it has been in the last few years. And I'll quote chief economist at CoreLogic saying higher mortgage rates coupled with more inventory will lead to slower home price growth, but unlikely to decrease home prices. So in fact, if you look at this chart, you will see that several economists, multiple sources here, are still predicting that the average rate of growth for this year over 8%. So slower than last year at 20% for sure, but we do expect prices to continue to rise. Second myth is that the housing market is in a correction. Again, because home prices are still appreciating, and that's projected to continue, that means that the housing market is not in a correction because prices are not falling. It's just moderating compared to the craziness of the past two plus years. And third, that the market is actually going to crash. That's really a myth because experts are saying that today's environment is nothing like it was in 2008. The 2008 crash was really attributed to the predator lending practices that were going on at the time. Standards were very different. So what's happening now is you're seeing the Fed has just raised interest rates again. So a lot of people are worried about that, but I think you have to consider that interest rate hikes do not directly correlate to mortgage rates, and at least not right away. So that could be delayed, or it could be not as much as the 75-point basis increase that we had the other day. So I encourage you to talk to your lender if you're thinking about buying. There are other types of loans. You might want to get away from the 30-year fixed and maybe take a look at the ARMs. The adjustable rates are coming back, and you could always refinance again in a few years. And so see what's the best program for you. So when something like this happens, such as something shocking to the market, such as a rapid rise of interest rates, we're usually in what we call a bridge to normal, which takes about 3 months. And we're in the latter half of that right now, I would say, that bridge to new normal before the market kind of moderates and settles down. So, it's interesting also to look at the chart I've attached here because it shows historically how interest rates affect prices. And you'll see here that even going back to the 70s, interest rates rose rapidly, and throughout the years it has risen. But the bottom line you'll see is the housing prices. And the housing prices, despite those interest rate increases, they've continued to rise, almost always with the exception of 2008. And that during that time, as we said, the lending practices were very, very different at that time. So locally here, what we're seeing in our market at Smith Mountain Lake and the Roanoke Valley is that we're seeing a few more homes come on the market. So inventory has slightly increased. The data shows 5% month over month increase in houses coming on the market. So over last month, we have that increase here. And the days on market is now averaging 20 days. So meaning it basically takes 20 days for the average home to go under contract. Months of supply is at 1.76. What that means is that if no new homes came on the market, it would take 1.76 months to sell every home on the market. And for there to be a balanced market, we're normally looking at 5 to 6 months, balanced between a buyer's and seller's market. So because it's still so low, that means we are still in a seller's market. And you may be seeing price reductions. And a lot of people are thinking, wow, I'm seeing prices reduced, so that must mean that the home values are coming down. But that's not necessarily the case. I think a lot of sellers were pricing their homes too high, trying to take advantage of the market, and just maybe adding 10% to the last price they saw in their neighborhood, thinking they could get it. But that's really not the case. We're in a very, very price-sensitive market right now. So I work with sellers to try to get the house priced accordingly and make sure that it is done correctly so that it will sell in those 20 days. So as far as multiple offers, we are still in that situation, especially at the lake and waterfront property. We are seeing multiple offers most of the time if a home is priced correctly. And instead of the frenzy where we saw maybe 15, 20 offers in 2 days, it's now more like 3 or 4 offers in a week. So it has moderated a bit, but the market is still incredibly strong and still seeing multiple offers here, especially on second homes in the lake area. So there are also new opportunities for buyers because of this slightly increased inventory. Homes are coming on the market, so you might have some more opportunities there. And there's also very many cash buyers as well. We're seeing cash still is king here in the area, and you'd be surprised how many people are still coming in with cash offers. So in summary, the housing market is undergoing a shift because of rising interest rates and continuing low inventory, but the market is still strong. So whether you're buying or selling, I would be happy to help you navigate this market and help you in any way that I can. Dawn Lambert, Town and Lake Homes and eXp Realty. Have a great day.